Have you heard people saying, sell your BTO or EC at a 5-year MOP mark to make the most money? Hi, I'm Nick, and today we are diving deep into the economics of BTOs, ECs, and new launch condos, and exploring whether you should cash in at the MOP or TOP or hold out for even bigger gains. Let's start with BTOs. Most of you know this. To apply for BTO, you need to form a family nucleus. Usually, it's young couples, either married or engaged. Your monthly household income needs to be within the $14,000 cap. Once you secure your unit, there's a waiting period of about 3 to 4 years before you get your keys, followed by a mandatory 5-year minimum occupation period, which we call MOP, before you can sell. As a seller, after waiting for 9 long years, would you be willing to sell at a low price? Chances are you probably will want to sell at record prices. Then who's buying these freshly MOP HDB flats? Beyond the typical Singaporean couples, married PR couples and even Singaporean singles above 35 are eligible. There's also no income cap for resale buyers, which opens the door to higher income families who couldn't buy BTOs before. This expanded pool of buyers creates a high demand, which drives up the prices. Take Eastlink at Canberra as an example. A 4-room BTO that cost about $270,000 in 2015 could now fetch around $700,000 in the resale market. That's a $430,000 gain over 9 years. Not bad, right? Now, let's talk about executive condominiums or ECs. These are sort of a hybrid between public and private housing, and the eligibility criteria mirror that of BTOs. A family nucleus is required, and there's a slightly higher income cap of $16,000 per month. Like BTOs, you wait about 3 to 4 years for your EC to be completed, followed by a 5-year MOP. So what's the big deal at the 5-year mark? Well, the resale market for ECs opened up to everyone except foreigners. This means singles, regardless of citizenship status, can buy in. Financing options also expand since buyers are no longer restricted by the mortgage servicing ratio, or what we call the MSR. Only the total debt servicing ratio, the TDSR, applies. If you and your partner earns a combined income of $16,000, your max loan for a new EC is around $1 million. This allows you to purchase up to a $1.34 million EC unit. However, if you look at a resale EC, for the same income, you all can take a max loan of $1.84 million. With this, you all are able to purchase a $2.46 million property. This is nearly double the budget compared with a new EC. That is why more people are able to afford higher prices in the resale EC market. Take Soul Acres for example. A 3-bedroom unit purchased for $708,000 in 2017 was sold for $1.28 million in 2023, a staggering $570,000 gain in just 6 years. Now what about private new launch condos? These tend to see faster price appreciation, especially since homeowners can sell after just 3 years without incurring the seller's stamp duty, or what we call the SSD. Developers usually price units lower during the launch phase to meet their financing requirements. Once they hit certain sales targets, they start increasing prices, benefiting those who bought early. For instance, let's look at key residences. A level 6 3-bedroom unit was sold at $1,700 PSF at launch time. Fast forward 3 years later, the same unit, but 4 levels down, was sold 30% higher by the developer, a paper gain of $535,000. If you were the owner of the level 6 unit, would you sell at a low price at the 3-year mark if you saw this level 2 transaction? In the subsale market, buyers can also see the level 2 transaction and they will be more willing to pay for a similar price for a subsale unit. This is why at the 3-year mark, another 3-bedroom unit could sell for $549,000 profit. At the 5-year mark for BTOs and ECs, or the 3-year mark for new launches, the capital appreciation is the most certain. However, from this point onwards, prices may continue to rise, remain the same, or drop, depending on market conditions. No one will know for sure. This is why some savvy homeowners choose to upgrade at this point. For example, a young couple might start off with a BTO for its affordability. At MOP, they sell and upgrade to an EC. After fulfilling the EC's MOP, they could then upgrade to a private condo. This strategy allows families to continually upgrade their homes without dipping heavily into their savings, as they leverage the capital appreciation of their properties and their increase in their household income for higher loan. I hope this video has helped clarify why timing your property sale is so crucial. If you have questions, please feel free to reach out. Don't forget to like this video and subscribe to this channel if you haven't. See you in the next one.